Good morning, and we are live with the first Cash is Clear live. I'm excited to be here. It's been about a year in the making, which is way too long, but thank you for being here, either live with me, I'm in my studio, or you might be watching afterwards, which I love it when people are watching afterwards. So thank you for showing up for the recording. This is Cash is Clear Live, the program where we will talk about everything related to small business, cash flow, and profitability. But first, I want to thank our sponsor, Pivot, the Unconventional Cash Flow Conference. I'll talk to you about them a little bit more later. Today, we're going to be talking about the 5-step Cash is Clear process to take any business, small business, we're focusing in on, from confusion to cash flow clarity. Now, 5 steps, what are they? First, mindset, how you think about your numbers, how you think about your money in your business. Number 2, modeling, creating a forward-looking cash flow projection. Number 3, now you see this is my first day. I forgot to bring water. So I'll bring some, drink a little bit. So number 2 is management. How do you move your money a little bit so your payments are later, you get money in faster, and be able to manage your money a little bit. The next step is mentoring. Once you have implemented systems, you need to teach others how your systems work. If you're a business owner, you're going to be teaching your bookkeeper or your accountant because they won't know this. But also talking to your staff. If you have staff, you're a larger business that's got employees. Some of those key employees will need to understand what you're trying to accomplish to be able to help you. So you're going to mentor them. Last step, number 5, we go for the fun part, which is maximizing cash flow and profit for your business. So let's go back to the beginning. Mindset. What is that all about? Mindset is all about how you think about your numbers. Now, we have a few different sources that we learn about our numbers for our business. Number 1 would be just growing up when we learn about money from our parents, or maybe they didn't teach us. We've just found out because we had to open up a checking account. I talked to somebody yesterday. He's a financial professional. It wasn't until he was in the university that he had to open up a checking account. And when you start with this small practices of opening a checking or savings account is when you start learning about money. And it's very simple. You put money in and you put a little bit more money in, you take it out. And at the beginning of the week, you've got a certain amount of money. And depending on how much you've put in, you take out, you've got an ending balance. That, my friends, is the essence of cash flow. The beginning balance versus the ending balance. If the beginning balance is higher than the ending balance, you've had negative cash flow. If the opposite's true, then you've got positive cash flow. Now, some of you might be listening to this and say, David, please give me a break. I'm a financial professional. This is like baby steps. And absolutely. So why should you be interested in this? Because if you're a financial professional that works with small businesses, this is the way the business owners are thinking for the most part. They didn't go to school to learn about finance for the most part. They didn't take years of accounting. They didn't study how to interpret a financial report. Cash flow to them is very easy to understand because it's what I just explained. And you know what else they understand? when there's no money in the bank account or when they bounce a check and it goes negative. Referring again to my mastermind yesterday, everybody remembered bouncing their first check, except for me, because I bounced enough that I just don't remember it. So my point is this: small business owners, when they're thinking about profit and loss, whether you like this or not, this is the truth. They believe that a profit and loss statement, and if you're a small business owner doing this, this is not your fault, what I'm about to say, but you are generally thinking about that profit equals cash, and it doesn't. Profit is a made up theory from accounting. In Accounting 101, we learn about accounting theory, we learn about principles of accounting, but we forget that profit has some numbers in there that are made of calculations and theories. For example, a huge issue is when you pay for something that's an asset, and you've got cash, which accounting looks like as an asset. And then you swap the cash for an asset called inventory or an asset called a computer. Whatever that asset is, it doesn't really matter. Your cash balance goes down. Not only does your balance go down in the theoretical books that you're keeping, but it goes down in the bank balance as well. And what goes up? The amount of inventory. Or you've got a computer sitting on your desk. So what's the problem with that? When you go to look at the profit and loss, the expense doesn't show up. It's not an expense. It's an asset. Now, you might expense the computer, or you might be working that you don't keep track of the inventory, in which case, yep, it's going to be an expense. But once you get to a certain size in a business where you've got a certain amount of assets and you're tracking your inventory, profit doesn't reflect inventory purchases and that cost. There's no problem with that. We need that type of accounting to help us understand the ebbs and flows. The challenge is small business owners. What will they be thinking about when they see profit? And I'll tell this story. I've told it 100 times. I'll tell it another 100 times. A business owner who handed me his accounting statements from the previous year. This is January. And he said, David, I made $250,000 last year, according to my accountant. Now, that's not bad. It was a $2 million, $2.1 million company in sales, $250,000 in profit. By most measures, that's pretty good. However, this is the second thing he told me, I only have $3,000 in my bank account. I don't know how I'm going to make payroll in 2 weeks. Well, we ended up in 2 weeks not only being able to make payroll, but we had a lot of additional funds. He had quite a bit of money in his bank account by the time we hit 2 weeks, because he had a lot of assets that were where his cash was, and he just didn't realize it. He didn't realize his $1 million worth of inventory could be turned into cash quickly. But we won't go there. I'm going down rabbit holes. I could talk about this stuff forever. So mindset, what's a couple of other things that small business owners think of? It's not just small business owners. It is drilled into us over and over and over again that a key measurement is revenue. Two key measurements. I just talked about profit, that profit is good, and people think profit equals cash. The other big issue is revenue, and people driving for revenue. Well, that's great. You need to grow. You want to grow. Most healthy businesses are growing, but there's two critical issues here. Number one, not all revenue is good revenue. Some revenue, you're actually losing cash, even if you show a paper profit. I won't get into the details, but I can illustrate it. It happens, and so much that I wrote an article. If you want to go check out my website and type in loser clients, and there's an article that says, fire your loser clients. It doesn't mean they're losers from a personal perspective. It means that they're costing you money. It means you're taking money out of your own pocket for them to work with you. So not all revenue is good. That's a key mindset that has to be established. And then the other one is revenue, is that oftentimes when you sell something, you spend money before you receive money. You spend the money before you receive the payment from your client, especially if you're on accounts receivable. Let me give you a quick example. If you're a cleaning company, you have to have cleaners and they get paid at the end of every week. And you start a new client today, the new client hasn't put down a deposit and they're on 30-day terms. So today is Wednesday. They go do it. You go and clean their office, and you need to pay your employees $1,000, and you're invoicing $2,000. Well, that's great. When does your employee get paid? Let's say it's this Friday. $1,000 goes out, and you're waiting now. If you invoice today and it's 30 days and they pay you exactly on time, you're waiting for 28 days to get paid. And so the more you grow, the more money you're going to have to outlay before you get paid. And it works that way with companies with inventory. It works that way with service companies. Government contracts can be 3, 4, 5 months between when you first have to spend money and when it actually comes in the door. So that's a huge mindset. All revenue is not good, and revenue will not necessarily solve your cash flow problems in the short term. And it may create massive problems short term. And this is a common misperception because there's a lot of people out there in the marketplace who are saying, hey, we want to teach you how to sell more. You should be selling more. And what's announced in the news? Company so-and-so increased earnings. They call it earnings, but what it really is revenue, increased sales by so much. And I guess they do call it earnings, also increased. They'll talk about the top line sales and the bottom line, which is profit or earnings. What don't they talk about? Cash flow. And yet cash flow is what keeps those companies alive. There was a large company that took a big hit to revenue and a bigger hit to profit, but nothing was mentioned about cash flow. And I looked it up. I had to look at the details of the press release. And what it came out to was that they lost so much cash that if they kept losing cash at that same rate, they'd be out of business in 4 years. And nobody talked about it. Now, that's not out of business next week or next month, but it's a huge amount of money. In one quarter, they lost, what would that be? 1/16 of all their cash. Now, they were having cash burn already. And it was accelerated during this really bad quarter. And I don't think they've recovered significantly. I haven't looked up how they're doing lately, but if they were on the same trend, they would be generally that accelerates because, well, they lost $4 billion with a B. They had $40 billion in cash. And you go, oh, that's so much money. All right, but that's fine. That's 10% of their cash that they lost. Oh, so it's faster than 4 years. It's a lot faster than 4 years. But if they lost another $4 billion, it would be from $36 million. And so all of a sudden, it's not losing 10% of their cash, it's losing 11 or 12%. You can see how that accelerates the lower your balance goes. So anyhow, mindset is huge. All right, let's do a time check. All right, we're only on the air for about 15, just another 15 minutes. It's a half-hour show. I'm glad you joined us. But let's go on to the next step. I spend a lot of time on mindset. Why? Because every step of the way, mindset is changing and you're learning something new. Now, the great thing is when you have a new mindset, that's permanent change. When you can realize and get these light bulb moments, that means you are changing how you view the world and how you're viewing the world of small business finance, cash flow, profit, etc. So let's go to the next the P, no, it's an M. Sorry, we've got 5-step process. They're all M's. Mindset, model. What does this mean? We create forward-looking cash flow models. Forward-looking meaning we're doing projections. Cash flow models meaning we're trying to estimate, and when you get far out, you're guesstimating, but in the beginning, early in, you're estimating how much cash is going to be leaving your bank account and how much cash is coming into your bank account this week. You start with Monday morning. That's real, a bank account balance. And then you look at your expected cash coming in and cash going out. And I was very careful to say not sales, because you could sell 5 times as much this week as you receive cash. Let me give you an example. You sell $10,000. Well, let's make it $12,000. $12,000. 2,000 of that you get paid cash, and 10,000 you send them a bill and say, pay me next week. So what we're worried about and what we're concerned about is the cash in your pocket today. That's what we're projecting out in a cash flow model. And we do it for at least 13 weeks. Why 13 weeks? Because it's a quarter. That's good. It's 3 months out. But more importantly, when you're looking that far into the future, you can spot issues. Now, if you're a larger company, or depending on how your cash flow is, you may need to go even further out to be able to spot trends, spot problems. For example, I worked with a company. It looked great. They were positive. The projections were wonderful until week 13. All of a sudden, they had this huge expense and they went negative. The projection was that their bank balance would be negative. And that's the name of the game, is keep your bank balance positive. Fairly simple, right? You learn that the first time you open up a savings or checking account. Why? Why did they have that type of a negative bank balance projected? It's because they had 2 large expenses that were on different schedules and they hit at the same time on week 13. And that was enough to create a potential issue, which was very simple to solve. You move one in or one out, or you do both to give yourself that much more cushion. And it fixes the entire problem, which leads me to the next step, which is manage. I just explained to you the fundamentals of managing your cash flow is moving expenses in or out. Yes, sometimes you move them in because you can't move them out. It's because the way money comes in and out of your organization, it's okay to move it in. And moving your revenue, your cash deposits in or sometimes out. That's one of the fun things about cash flow, is sometimes the best strategy is the opposite of common wisdom. And we're going to get to that way down the road. But it's a lot of fun when we start talking about collect money slowly, which is the opposite of the conventional wisdom, is collect money as quickly as you can. We're going to talk about pay your vendors quickly, which is the exact opposite of, delay your, don't pay your vendors, hold off. That's a great way to increase your cash flow. It doesn't really increase your cash flow long term. It helps you get out of a fix. But depending on your situation, a great strategy is pay your vendors early. So that's down the road, but that's all part of managing, pulling money in, pushing money out, and moving it around on your game board, which is your cash flow, which we did in step number 1. All right, let's keep going. Mentoring. What I am teaching to you now is a type of mentoring. If you have clients, your clients will need to be taught a new way to think. They've never seen this before. If you have people within your business because you're the business owner, you're listening to this because you want to learn yourself, you will need to teach them. They have never heard these things before for the most part. Now, what happens when they're taught? Let me give you a good example. I was working with a client. They just hired me to say, David, where are we? Can we dig ourselves out of this? They didn't say we need help or anything else. I said, okay, great. I'll create a cash flow model, and that will show you where you can expect to be. And let me tell you, it wasn't pretty. At the end of the day, it was a big loss over the quarter. They would have to make a significant investment to be able to dig themselves out. They had a revenue issue. So sometimes you can't fix this with just moving money around or the other strategies. You need more revenue. But let me tell you what happened. 3 things. Number 1, I showed them the cash flow model, and these were business people. Oftentimes the small business person is a technician who wants to do something. You've learned how to do something and you're really good at it. And so let's sell it. I'm a good cook. I'm going to open a restaurant. I know how to repair engines. So I'm going to open up a store that specializes in lawnmowers and leaf blowers, etc. And so you're a technician, cash flow. But you don't know how to run a business. Sorry, I just had a spider drop down and look me in the eye from over there. So that's what got me distracted. That's the joy of live recordings. And so these 2 guys who own the company I was working with, they were business people who decided to open up a car repair. They were car aficionados. And they said a couple of things. Number 1, David, we finally understand what's going on. We've talked to our accountant, we've talked to our industry specialists, and they couldn't explain it. We finally understand. We can see what's happening. Thank you. That's number 1. Number 2, I talked to them a week later, and they had the best week of bringing cash in that they had ever had. Because just by talking to them a little bit about this concept of focusing in on cash, they were able to make some changes to the way they thought. Again, this is mindset, but it was because I was talking to them and showing them. They realized that they could do 3 different things that would help them both collect money faster, get paid faster, as well as start jobs faster. And they had their best week ever. Now, did that fix everything? Absolutely not. We're still working on this, and they're still having challenges, but it's a great example of how mentoring can open up doors for your clients or your staff to work on the business, because the majority of those changes didn't come from the business owner. They came from a key employee who worked directly with clients. All right, let's get to the last one, which is the fun one, which is maximize. People everywhere want to maximize their profit. It's this concept that says an accounting that you move all the numbers around at the end of the day, the end of the week, the end of the month, the end of the year, you've made a profit. Well, I'm here to tell you once again, that doesn't necessarily mean you have money in the bank account, but it's not a bad thing. It's better than losing money all the time. With a few exceptions, real estate. Why do people invest in real estate? Because they can lose money year after year from a profit and loss perspective, but what's going up or what is steady, what's coming in? Cash. Cash flow. That's why people love real estate. They take a loss so they get to not pay taxes, or they offset taxes somewhere else in a different business. So we've got to remember that to maximize, we're maximizing two things. One is cash flow, the other one is results in profit. If you maximize your cash flow, you will maximize your profit. It's not necessarily the same the other way. It can take a while, but you can live with maximizing cash flow. There is a possibility your company will die on the vine when you're just looking at your profit. So why is that so much fun? Well, I've put together about 231 cash flow strategies, and some of them are in the managed side, and some of them are the how do we get out of trouble side. However, the majority, about 160, are for maximizing profit and cash flow. And that's where you all of a sudden start to really make a lot of money. For example, fire your loser clients that I talked about earlier. That is a maximization strategy. You can get rid of a client that's costing you money, sell less, and have more net profit. This isn't imaginary. This isn't theoretical. I've done this in my own business with small businesses as a consultant. I've done it with my own business as a business owner, and I've done it as a Fortune 100 vice president, where we cut products from a product line, revenue went down, and profit just went way up. This is real tips. I'm wrapping up now, but before I do, and it's going to be a good wrap up, you're going to want to stick around because I've got something to give away to you so you can learn more about this and be able to get a free ebook. So I want to tell you about our sponsor, Pivot, the Unconventional Cash Flow Conference. It's a new type of conference. Number one, it's going to be focused in on learning the skills I just talked to you about. Number two, it's going to be in a hands-on experience, small group in a resort in Cancun, Mexico. And it's going to be about half a day of learning and the rest of the day available to you to absorb the knowledge, plan how you're going to change your business or how you're going to implement what you've learned, but also relax and enjoy yourself, eat good food. And the best thing of all, maybe, is you're not going to be pitched. I just did a survey here on LinkedIn, and the number one thing people hate is people being pitched. Do we have some sponsors? Absolutely. We've got the Pivot's got a couple of sponsors. However, they're not going to be there. Why are they sponsors? Because we believe they're good products. We use them, and they are key, have a couple of key cash flow strategies for each one of the sponsors. So let's go back to what we learned today, summarize it. Cash flow, cash is king, but most people treat it like a pauper. You need to treat cash like royalty. How do you do that? Number one, change your mindset. Number two, learn how to do modeling, forward-looking cash flow projections. Number three, once you've got that model, manage your money well, and then go teach others, mentor them. And finally, maximize. It really is, when you boil it down, fairly simple, and anybody can learn this if you want to. And the best part is every single business on the planet can use this model and these strategies and these systems to be able to always have enough cash. This is episode number 1. Thank you so much if you've, well, obviously you've listened to the end. Okay, so I told you there's an ebook. Here you go. The website address. There it is. It's actually right there. Sorry, it was hiding in plain sight. If you look at davidspear.com/24boost, these are 24 cash flow strategies that will boost your cash flow and your profit. So go ahead and take a look at it. There's details in there of exactly how to implement it. If you're not following me yet, follow me on LinkedIn, follow me on YouTube. This is going to be once a week. I'd love to have you back, and it'll get better every week as I learn what I'm doing. Thank you for being here, and have a wonderful week.